Hi there, everybody. It's Ifti from Extreme Returns. Welcome back to the next series, or part of the series, where we're going to discover who is the best elite trader. Quick background, as you know, I qualified as a chartered management accountant many years ago. Loved working for companies like Unilever and Mars, but got fed up of accounting, so went into sales recruitment and headhunting. Really enjoyed that. After a number of years of doing that, decided the best way forward to get control of what I'm doing in my life is to set up my own company, set up an estate agency, did well at that, did a number of other things. Most recently, peer-to-peer car hire. I joined Etoro early last year, 2020. This account, Extreme Returns, has only been going for a number of months. As you can see, November, December, total of last year's 2 months was just over 6%. We're coming towards the end of January. It's the 26th, 8.3%. 18 copiers, which is not bad. I do consider copying as well. Yearly drawdown, only 5%. I know it's early days, but I like to keep the numbers as good as we can. So let's recap. The Popular Investor Program is one of eToro's secret weapons. And there are 4 levels: Cadet, Champion, Elite, and Elite Pro. We've covered all the Elite Pros. There's only a handful. There are currently now 46 Elites, and we have gone through several of them. We've gone through Dean Fredericks, who's at number 1, Jian Sweng from Malaysia, number 2 at 39 points, Du Fulai, 37 points, also Lieber Wasser at 37. It Sounds Great, Stefani, and Social Investor at 35. We're today going to cover the next one, which is, I think, one of the top female popular investors. Her name is Lena Burse. Let's go through her biography. So she says, "Hi, my name is Lena. I'm based in the UK and have been tech growth sector investor since 2014. We'll come on to that in a moment. She has got a long track record. After the sale of my husband and I's company," doesn't say what the name of the company was. Be interesting to know a bit more detail. "I have seen what it takes to run a business from start to sale. My strategy, I'm a buy and hold long-term tech stock investor who holds positions for 2-3 years. And during downturns, my strategy is to hold my shares and buy more." Recommendations, we won't go through all of them. She's got social media accounts as well. And 31,000 followers, 2,000 odd copiers. Going down slightly. Stats-wise, let's look at, now she's got a number of years. First 3-4 years weren't anything special, minus just break even in 2014, 2015, just under 9%, minus 11% in 2016. 2017 was good, 36%. I'm rounding it up, as you can see. 2018, minus 4%. 2019, 46%. Fantastic performance in 2020, over 100%. So you'd have doubled your money. And this year to date, she's doing very well as well. Let's look at her portfolio. So her largest shareholdings are in NVIDIA, fantastic company. I've got that as well. Apple, Amazon, Shopify, Netflix, PayPal. She's got very good, sizable positions, 5% plus. Mercado Libre, South American internet company. Tesla. She's made a lot of money on Tesla as well. Square, Adobe, Zoom. So they're all high tech, as she says in her bio. Microsoft, Fastly, Fiverr, Pinterest, AMD, Trade Desk, Peloton, Twilio, SolarEdge. I think that's the first non-high-tech company. Perhaps you can call Peloton as well non-tech. This is solar company, energy. Etsy, DocuSign, CrowdStrike, Lemonade. That's insurance. I'm holding that as well. Roku, Okta, Facebook, C, Atlassian. Now, I'm not going to go through the rest of them because they go below 1%. So many of these companies I have covered in great detail. Go over to my YouTube channel, which is called Extreme Returns. Here we go. And you can see lots of the videos here I've published. I don't know how many it is, but it's a lot. Now, anything that you see with the green background is a financial report. So there's ASOS, there's Google. You can see Illumina, Tesla, Square, Apple. So I'm not going to go through all of these. You can flip over to my YouTube channel. Please do subscribe as well. But something that I would like to do is go through, just pick out some of them and go through them. So let's head over to, I mean, I've already got Trade Desk up here. Trade Desk is one of her companies, I think, way down here. But let's have a look at Trade Desk because that's an interesting company. I will go through some more as well. Now, usual kind of things that we do if you've been following me is looking at quality, value, and momentum. Quality metrics from the financial accounts here show 95, and it's been going up recently. Value, which means exactly what it says, how good a value is it? It's 3. It's in the bottom 3 percentile, which means it's really expensive for the current accounts. And that's important. We'll come on to that in greater detail later. Momentum, 97. So this company, well, let's have a look at it in a bit more detail. First of all, what do they do? So Trade Desk, just in case you didn't know, obviously it's a technology company. Lena's holding the vast majority of her portfolio in tech. Company provides a self-service platform that enables clients to purchase and manage digital advertising campaigns across various advertising formats, including display, video, and social, and on a range of devices. We don't have enough time, otherwise I'd go over to their website and do a bit more of a deep dive into it. But you know what? Let's take 1 minute out and have a look at Trade Desk. So, oh, hang on, what did that say? Media for humankind. Interesting. So this is what their website looks like. Advertise to audiences across the world from anywhere in the world. Grow your brand. It's one of those innovative companies that are ahead of their time. And the one thing they have to be wary of is competition. They're based in Ventura. Where is Ventura? I don't know. Let's have a look at their revenue. Now, their compound annual growth rate of 71% is fantastic. Although, having said that, they started from a very low base of $44 million in 2014, more than doubled it, nearly tripled it the next year, nearly doubled it the year after, added 50% there, and added another 50% plus there, and kept on growing and growing. Now, 2021 estimates at 1.1 billion. So in terms of growing their revenue, I think that's good. Now, one question I would ask if I had a bit more time to do research, if this was one of my picks, is have they grown that revenue organically, or have they done it through acquisition? Because if they've done it through organic means, which means they're just growing the business by getting more customers and charging them more and so on, going into new markets. And I think this is a really, really good company. To keep on growing at that rate year after year is good. If they've done it through acquisitions, then I would have more of a question mark about picking up this stock in my portfolio. Right, net profit, again, I mean, look at that, 636% compound annual growth rate, but I think you have to take that slightly with a pinch of salt because they're starting off from such a low base. Having said that, you do have to give them some credit because it is a company that is profitable for many years at the net profit level. Now, the PE ratio is all over the place. It's incredibly high, which means that, I mean, the PE ratio, as you know, is the one ratio that everybody looks at. I don't think we should get too hung up about it, as you've seen from my previous videos, the reasons why. There are other stats out there which I think are more important. And you should never look at one stat in its one metric in isolation anyway. Operating margin. Now, this is I think really important. Now, they had a really good operating margin back in 2015 at 33%, and it's been going down ever since. That's a question mark for me. I would ask, why is that happening? Now, if that's because they're acquiring companies or they're going to low margin parts of the business, this is a red flag to me. I like to see the operating margin either hold steady. Now, if they'd kept steady at 33%, that would be really good. Now, just to give you an idea, I know it's a very, very different company, but Microsoft is huge. Way, it's a completely different league. But if you look at their operating margin, it's comfortably in the 30s, and now it's high 30s. So for a small company like Trade Desk not to be managing to keep their operating margin high, in fact, it's gone from 33% all the way down to 12%. This is a big red flag for me. Is it because there's more competition? That could be another reason. I'd ask that question. Now, return on capital employed, again, you can see because the operating margin is going down. I mean, what it looks to me is that they're getting more and more revenue, but at the expense of margin. However, funnily enough, their net profit has been going up. So it doesn't make sense unless you're cutting costs at a greater rate than you're cutting your prices. Now, here's a really important metric, free cash flow per share. They have been all over the place. See, what I like to see is steady progress. And here you see $1.68 dollars per share in terms of free cash flow. Free cash flow just means how much cash have they got left over in the business after spending for everything. It goes down significantly here, goes up, goes down, goes up. So it's like a yo-yo, and you can see that from the graph. I don't like that. I like to see steady increases or at least stability. I don't like to see it wildly swinging between 0.4 and 2.72, and again 0.4 to 1.34. I don't like that. Having said that, they are sitting on a decent cash pile of $557 million. In terms of the share price, let's have a look. Pre-pandemic, they were trading at around 200 to 220. Now they're 785. So that's tripled. Has Lena made that kind of money from Trade Desk? Wow, 153%. Not quite triple, but very good. So Lena must have got in midway through the year. Having said that, having gone up significantly to 935, 970 in fact, it's been going down to 785. So it's lost a good 15%. Maybe the market thinks it's overpriced. And you can see the relative strength. So I'd question that momentum at 97 currently, because everything tells me, look, moving average, 50-day moving average is going down. The relative strength to the market is going down in the last month. If Lena thinks this is a good share, and clearly she does, why not buy more now? That would be my suggestion. Anyway, good company, a few question marks. Let's look at Shopify, because we haven't done that one in, I don't think I've covered that in a while. So Shopify, as everybody knows, is another tech company and provides cloud-based multi-channel commerce platform designed for small and medium-sized businesses, offers subscription solutions and merchant solutions. Now, Wall Street loves the subscription model, everywhere from Netflix to even Apple. If you have monthly revenues coming in on a regular basis, they love it because it's revenue which is residual, comes in every single month, no matter what. So that's something they like. Canadian company based in Ottawa. Now let's have a look at their stats. 86 in terms of quality, which is good. Value is 7, momentum is 98. PE ratio 334. My gosh, that's high. And on a cash flow basis, their PE ratio is more than double that, 802. Now, to give you some kind of perspective, let's just remember that number, 330, let's call it 335. If you look at the S&P 500, the PE ratio for the entire market is 21.5. And they're giving a dividend, which is 2%. If you look at individual companies within the S&P 500, let's look at the... I think it's quality, it'll be under the PE ratio. Nope, it must be under growth. Try again, Nifty, value. Here we go. Right, PE ratio. So this is going to be slightly different because it's rolling 1 year, but it gives you a good indication. Now, the company with the highest PE ratio in the entire S&P 500 is 418. That's Valero Energy, independent petroleum refiner. Then you've got Ventas at 260. Tesla is at 213. So for a company to have a PE ratio of 335 tells me that it's a very risky bet. And the fact they don't pay a dividend at all, that's not good. And on a cash flow basis, their PE ratio is even worse. This is risky. And you can see that in the value there of 7. Having said that, I'm sure it's made a lot of people a lot of money. The question is, will it continue to do that? And I'm going to help you answer that. I'm going to help to answer that question in a little while. Before we do that, let's look at their revenue. This is something I love about this company, that it's been growing so fast. If you look at 2014, its revenues nearly doubled and nearly doubled again the year after, and nearly, well, not quite doubled there, but not too bad, 75, 80%. Again, another 40% plus, 50% increase there. It's been growing at such a fantastic rate. Look at that, 72% compound annual growth rate. That is fantastic. And that's why I think so many people have piled into it. But now here's the caution. That for most of that time, they've been making losses, and the losses were growing until 2019. They say that they're going to be making a profit in full year 2020 and 2021 targets, 471 and 445. My question would be, why are you saying that your profits are going to be 471 for 2020, but for 2021, they're going to be going down? 2020 is the brunt of the pandemic. 2021, you should be looking to come out of it and get the economy back up and running and benefiting from that. That's one question. Now, next thing is, on an operating margin basis, they're still, look, see, net profit there is profitable. But on an operating basis, the day-to-day operations of the business, they're still showing a loss. That's a red flag to me. Next thing is, return on capital employed obviously will follow through with that as well. On a free cash flow basis, this is something which is actually positive, that they've been showing a profit on the cash flow basis, and it's going up significantly. So that's good. On stockpiling cash, they've got more than 6 billion sitting there, which is good. Now the question is that how have they done that? Let's look at the balance sheet and see if that's through debt. Total long-term debt, nothing. No debt at all. That's really good. So how are they getting all this cash? Is it simply through their operations, or have they been raising money in other ways? That's a very good metric, the fact they're sitting on so much cash. So there's lots of things to like about this company, and and look, on the bankruptcy, the Z score, I won't go into this in too much detail, but an academic called Altman said, what are the chances of this company, of any company, going through bankrupt in the next 2 years? And that's why it's called a bankruptcy risk, or the Z score. And they asked some very simple questions. Are liquid assets a significant proportion of the assets? Do reinvested earnings make a significant portion of the assets? Are assets relatively productive in terms of earnings? Does the firm value compare favorable to its liabilities? Yeah, it's got no debt, so it will. So in many respects, this is a really good company. But I'm just a bit worried that it's overpriced. How much does Lena have here? 5%, and she's made a lot of money from it. Has she been selling any Shopify in the last month? Doesn't look like it. You'd have to go back in time. Let's have another look. Let's see. Go back 1 year. Shopify. Oh, doesn't let me do it. That is 1 year. Oh, she hasn't sold any. I would be tempted, if I was Lena, just to sell some Shopify, because I think it's going to, there's a risk there. Okay. Right, let's look at one more, maybe one that we haven't looked at for some time. What about Peloton? My internet has decided to now pack up on me. It's frozen. Okay, let's come back to that in a little while if this unfreezes. Let's put all of those numbers in, and let's see where we get to with Lena. There she is. She's called One Girl. So having put all of those numbers in, from NVIDIA all the way through to Sedge, I haven't done all of her stocks. I've done the top 20. So her average, 20, to be fair, gets 80% of the portfolio. Her average for quality is 78. That's good. And I'm going to come on to comparing it with others in a moment. Her value, however, is only 9. Now, that will come about because she's a tech holder. Most tech companies have got very poor value. And you can see here in her portfolio, Trade Desk that we just mentioned is 3. Peloton, which we couldn't cover because my computer froze, is 6. AMD is 6. Pinterest is 8. Lots of these tech companies are on the single digits. Microsoft 23. That's taking the average up. In fact, if you took Microsoft out, what would it fall to? Fall to 8. Okay. Zoom is at 2, Square at 3, Tesla 3. Look at that, Shopify is at 1. I think this is a very pricey portfolio. very poor value for money. And I'm going to give you some suggestions, or Lena some suggestions in a while. 85 in terms of momentum, you'd expect that. So the other side of value is momentum in today's market. And you'll often see where it's poor in terms of value, take 5, for example, momentum is really high. Pinterest, the same. So a lot of these companies have got great momentum. They're on an upward trend. We're in a bull market. However, are we getting ahead of ourselves? When you put all of those numbers in and compare to others, look at that. This chap here has got 86, that's social investor in terms of quality. Lena would come in second. In fact, let's see where she comes in when we put in all of the numbers. So taking it from the beginning, her returns average at 20%. I've equally weighted it for everybody. So if they're on for part of the year, I've taken that into consideration. 20% would mean the worst so far in terms of returns. But I think that's a little unfair. I mean, that's what the numbers are. I can't change that. I can't help that. If you take into account just the last 3 years, her numbers would be very different. In fact, let's do this exercise very quickly. I'm not going to change it because I can't. That would be cheating. But just for illustration purposes, her last 3 years would equate to just under 48%. That would put her first, second, third, fourth instead of seventh. But I can't do that. But I'm pointing that out. She has got incredibly better, much, much better in the last 3 years. Let's just take that out now. In terms of quality, she ranks at number 2. So she gets 4 points for ranking in terms of returns. In terms of quality, she comes second, just behind social investor. She gets 9 points and everybody else drops. That's why the numbers are changing, obviously. Value, she comes in again last. And this is a big worry for me. I'm going to write that down as a suggestion in terms of value. Pick, diversify into better value tech companies. I'm going to give examples of that in a little while. Now, in terms of momentum, she's at 85. Only Jian Swang, who's also got a very tech-heavy portfolio, beats her. So she gets 9 points. In fact, let's cover that very briefly now. So if you look at Jian Swang, his value is 13. Now, it is only slightly better than Lena's, yes, but I think it's important. I mean, she's got to get this value better. If you look at his portfolio, it contains many companies that have got much better value. And let me give you an example of that. In fact, it's here. Jian Swang. Here we go. So if you look at his, he's also got very, I think nearly all of them are tech companies. Although some of them are really poor, if you look at others like JD, it's 18, Baidu's 43, Tencent Music Entertainment is 22. So maybe Lena can diversify away from US tech, which is big, that everybody's got. Why not look at either smaller techs, and I can give examples of that, or like Jian Swang has done, into more even better value ones, the Chinese ones. I don't think she holds any Chinese companies. I may be mistaken. I mean, that's Latin American. They're all American mostly, or Canadian. Oh, C is Singapore, I guess. And Neo is Chinese. So she's pulling it up slightly. But I just worry that her value is so poor. Okay, let's move on. So in terms of the number of posts she's doing, it's really important, as you know from me, from listening to my videos, I think it's really important to communicate on a regular basis. So dear copiers, 8 days ago, that's pinned with 50 comments, which is good. 19 days ago, she's a big fan of Peter Lynch, which is great. So am I. 8 comments. 22 days ago, 47 comments. 2 months ago, 23 days ago, 2 months ago. So she's posting on average three times a month. 3 months, 3 months, 3 months ago. But not many people are responding always. Maybe she could improve the number of times she's been posting. 3 months ago, but she is posting. You can't fault that. She gets 3 for that. I like to see people in different sectors. I know she's only got tech, but within tech, there are so many different sectors. Let's have a look. NVIDIA semiconductors, Apple is consumer, Tesla is automotive, and Pinterest, AMD more, semiconductors, solar energy, insurance, stroke financial services, Square is also financial services, social media. She's got it covered in terms of the variety of sectors. I'm going to give her 3 points for that. International, we mentioned that before. So she's got 1 share at 1%. Apart from that, I think I'm going to count Canadian as American because it's listed on the New York Stock Exchange. So it's not the country, it's where it's listed. In fact, let's look at if my computer's working now. Where is Melicado listed? I've got a feeling it's on the New York Stock Exchange. I'd like to see more diversity in terms of where she's picking up company stocks from. I'm going to give her 2 points because there's an argument to say only 1 point, but I have given the rules here. I'll give her 2 points. I would like to see look outside US. Look at text. Spelled that wrong. Okay, next is cash. I've given the rules here. Less than 5% is you're not holding on to enough for more opportunities. More than 10%, you've got cash sitting doing nothing. It's not returning an asset, any value. The ideal level is 5 to 10%. How much is Lena holding on to? Nothing. You've got to hold more cash. Otherwise, hold some cash. The number of companies, if you've got fewer than 10, it's too concentrated. If you've got more than 30, it dilutes the returns. You should be holding ideally between 15 and 25. She's got 34. It's too many. Just gets 1 point there. Where are the profits coming from? What you want to see is your biggest profits coming from your biggest holdings. So her biggest holding is her biggest 3, NVIDIA, Apple, and Amazon. She's fantastic. I think she's held on to them for a long time. But are they where the profits are coming from? not quite. They're coming from Shopify, Mercado Libre, and Tesla. I'm afraid I can't give her any points for that. But having said that, I would like to, because these are decent positions. They just happen not to be the top three. I mean, Tesla is, yeah, it's outside the top three. So unfortunately, I can't give her any points on that. And you want to see losses coming from your smallest positions. So her smallest three positions are Nicola, Work, or Slack Technologies, which is now being taken over by CRM, and Alteryx. Nicola, Work, and Alteryx. And Alteryx and Nicola are two of the worst performing. Snowflake is a third, so I'd give her 2 points for that. And she'd end up at 35, just behind, same points as Social Investor. And my advice would be, one thing I don't understand is why top investors, this is one good example, hold small amounts in companies. And I mean, there's several here below 1%. If you look at 1, 2, 3, 4, and this is 1%, these are all 1%. Why hold such small levels? If she were forced to cut out 5 positions, what most people would do is get rid of the ones which they've held for a while and are not doing anything, and then jump into some of these. Now, if she had done that, if she had doubled these positions by getting rid of the bottom 5 positions, these would be double, and her stats would be even better. But I think overall, this is a bit of a risky portfolio. And if she looks around, she can find better value tech companies, because what's going to happen is that either her portfolio is just going to keep on going up, but it will only go, once it goes down, it's going to crash, because so many of these companies are, the momentum and the financial metrics are so similar in being overvalued in the PE ratio, the cash flow basis, they're not giving dividends. So when they crash, they're going to crash heavily. And if you wanted a portfolio which is very tech heavy, but has got some downside, we've seen people like these gentlemen here, Jan Swang, Du Fulai, who have got better hedging, I'd say. And their numbers are very, very similar. If you take Lena at 101, Du Fulai is at 120, and Jan Swang is at just over 100%, which same as Lena. But having said that, she was much better than him last year. What was that, a full year even? I don't know. But not as good as this chap here, Du Fulai. So if you're looking at wanting a tech heavy portfolio, this guy, what's his name? His name is Wan Yon Lai. He's from Malaysia. I think his portfolio is much better because he's got better value. He's getting better results. He's got more diversification. He's got more international companies as well. And he's got healthcare companies as well. Now, I know Lena says that she does tech only, but I think there's no harm in looking outside of pure tech. And look, she's already done that. If you look at some of the companies in her portfolio, they can be classified as strictly outside the tech field. Take that one, for example, Solar Edge Technologies. It's got technology in there, but it's a solar company. That's energy. If you look at some of these companies, Lemonade, that's an insurance company. So she will look outside of pure tech because she's holding it. So I would say it's a risky portfolio, and I'd be worried. She's not holding any cash, so when it does crash, she's going to have to bring money from outside, and everybody in her portfolio is going to have copiers are going to have to add to their portfolio if they want to match or synchronize with hers. Anyway, that's my take on it. If you wanted to diversify, this is one good way of doing it. My wife, Adiba, that's what she looks like, has got an account called Asian Tigers. She invests only in developed Asia because she thinks two things. Firstly, that it's the biggest trading block in the world. And secondly, it offers so much better value. I daren't analyze her portfolio in the same way as I have everybody else's. She'll probably kill me. But some of her companies have done really well. Look at this, new technologies, 67% return. Maitang, 42%, JD, 21%. And she's only been on the platform for less than 2 months. So this company here has increased by nearly 67% in just over a month she's been holding that. So that shows fantastic achievement. Look, 9%, she's doing better than me. And she's got more copiers as well. And her drawdown is minimal. My eldest son, if you wanted further diversification, is Dr. Muhammad. He's a junior doctor working in a local hospital. He loves making the world a better place, and he's got green companies. Now, his stats, he's just started in January, 13%. And again, very, very low drawdown, less than 3%, 6 copiers. And his portfolio is full of companies that have done incredibly well. Look at this, United Natural Foods, nearly 72% in 1 month. So there are lots of companies out there, and if you know how to pick them or be lucky enough, then you can benefit greatly. My second son is Amir. He got us involved in Etoro. Now he teaches FX, and his stats are okay. 5% here, minus 8% there. Drawdown is a lot higher, more risky. His portfolio is, as you can see, profitable this month. And finally, I'm going to give a quick plug to my third son, who's a medic studying in Bulgaria. All he wants to do is get better than the banks and beat Olivier Danvel. So his drawdown is practically nothing. Very low risk. It's 2 for January. Do consider copying, at least watching. And his portfolio is full of ETFs and low risk companies. So my name is Iftikharuddin. Thank you very much for listening in. Really appreciate it. So just to recap, Lena would be equal 5th. If we were to take just the last three years, she would jump ahead of Social Investor. And she might even jump ahead of It Sounds Great. But as we stand, these are the rankings. Dean Fredericks has got the most number of points, 41. Jan Swang at 39 in number 2. Dufalain Liebowasser at number 3 equal. This really should be 5, shouldn't it? That's my mistake, beg your pardon. And this becomes 6. It Sounds Great at number 5. Social Investor and One Girl tied in 6th place. Thank you very much for listening in. Let's see how the next person does.